Anyway, so let's yeah, so I was do let me know, can you hear me now? Okay. Yes. All right. Yeah. So one, oh, I look like Buddha. uh, that's a big comparison, Sam. All right. So yeah, so one big development on the crypto side was the executive order coming from President Biden. A lot of a crypto community was little concerned about it, little jittery about it, thinking maybe we'll pass some rules, maybe there's some more guidance. We don't know, because executive order by the definition doesn't have to go through the Congress and all that stuff. It's based on the whims and the fancies of whoever is in White House. So we did have executive order coming out yesterday, and surprise, wasn't bad. I think from an overall theme perspective, I would say it was kind of a nothing burger, but it did gave a strong message to all the government agencies in US that, guys, we got to take this space seriously. If you read through this, we'll realize that there is no special rule or a new law that have been passed in this particular executive order. So the whole crypto community had a sigh of relief, think, wow, this is good that we didn't get any arbitrary law thrown on us, right? Could be anything, you don't know. Maybe they could ban proof of work, saying it is bad for climate. Maybe they could impose additional regulations on exchanges to do more KYC. But there was no specific rule that was announced in the executive order. But what was announced in executive order, and I'll probably go, just give the summary. It's a pretty long one, but from a summary perspective, what President had mentioned is that now he's directed all the federal agencies, right? All those three-letter agencies, SEC, OCC, FinCEN, and all those are a DOT. He's directed all the agencies to spend time, effort, and dollars in looking at this particular economy really seriously. Right? So this was an acknowledgement saying if United States want to stay as a global leader, both in technology side as well as in the financial side, we have to understand how this crypto economy works, how it behaves, right? Then talk about how to regulate it so that the scams and the investors are protected. We can make sure that this is secure and can prevent bad elements from taking advantage of this. Right? So from that perspective, I think my opinion is, hey, that was a good signal coming from regulators that this particular economy deserves a lot more attention and the real attention. Right? So one big takeaway is more discussion is always good, right? It's better than some agency coming and throwing arbitrary rules. Right? Let's say SEC coming and saying, well, we should ban this or that. Or Department of Treasury putting ban on over any type of cryptocurrency, or federal bank doing something stupid. So, which is good. We're gonna take some more thoughtful steps towards this particular economy. Okay. So it forces all those agencies to spend time and collaborate on how best government, especially United States, should move in this crypto economy. Right? So no rush laws, no bans, no additional burdens on the current players in the crypto economy, which is good. Second good thing is the fact that this executive order has instructed all the agencies, means no single agency has got absolute power on this particular economy. It's going to be a joint initiatives across the different agencies and the regulatory bodies, right? OCC, CFTC, SEC, and all this stuff. So it means no single agency could kill this ecosystem. Another big idea point that's discussed in this report is around CBDCs. How should United States move in terms of starting their own CBDCs? I know from a technical perspective, Federal Bank has been talking with MIT, Federal Bank at Boston and MIT. They are in a collaboration from a technical standpoint, but there are a lot more issues in CBDCs which are related to more of privacy, citizen rights, etc. Which, those are, I think, is a much bigger issues than the technological issues. So I think those need to be sorted out, and this executive order actually puts some timelines on when these agencies need to finish their work and present their report. So the most of the reports should be sent to President in 180 days. Of course, there are some reports which are related to crypto mining and its impact on environment. Those need to be shared on a regular basis, 180 days, then after 360 days, and things like that. Which I think, in my opinion, this was one of the biggest, I would say, event in the crypto world for this week. And the fact that we didn't get any new regulations, anti-crypto regulations, there was nothing, which was eventually a positive signal from the government. So we'll see. So the timeline has started for 180 days. We'll see what does these agencies come up after 180 days, and how this particular sector of our economy changes. We'll be interested to see. Maybe we'll circle back in 6 months to see what happened. But yeah, so essentially this was more of directing all the agencies to take it seriously, to study, put hands on resources, and then table your recommendations to the government, to White House, for President to take, to consider it, and then we'll see what goes through Congress, etc. So I think overall it was a good initiative. I don't know, any other thoughts on this one? Okay, so that's at a very high level when you're talking about crypto as an economy. The other thing is there was an ETH conference, ETH in Denver. It's called ETH Denver. And we also saw some announcements over there, especially from Ethereum perspective. So I want to share a quick update on Ethereum side. All right. So Vitalik Buterin had mentioned that maybe, the Ethereum finally will move to proof of stake model, right? From currently they are using proof of work. They will move to proof of stake in next few months. So I guess maybe by July or around summer, we should see Ethereum finally switching over to proof of stake. Reason is because a lot of the rival DeFi chains, they are chasing Ethereum at its heels. In 2020, almost 100% of the DeFi used to happen on Ethereum. and that resulted in not just DeFi, but also the NFTs, right? That resulted in a lot of demand for Ethereum network capacity, and of course, that also resulted in increase in the gas fees. And then we saw a lot of other competitor chains, blockchains that took advantage of it, and started grabbing their market shares. So right now, if I don't know, maybe Ethereum's overall share of this market is close to 70%. This is okay. It is 70% of much bigger pie than it was 100% of the overall market in 2020. But after 7 years of working, now finally looks like maybe in this summer, we will have Ethereum switch over from proof of work to proof of stake. Now, how that's beneficial for Ethereum community? Because it will become faster, more secure, and lower transaction cost. So the keyword here is, I think, lower transaction cost. Because right now, if you want to do or NFTs, or if you want to record any transaction on Ethereum, the cost could be depending on what time of the day you do, how much is a congestion in the network. But on an average, it could be in dollar terms, could be $100. Sometimes I have done some transactions, paid $150 to $200. Right? So you really cannot use this, to buy. Let's say if I want to buy an NFT, you really don't want to buy an NFT worth $50 and where you end up paying $200 to just register that transaction on Ethereum network. Right? So many of the retail investors or retail users started to move from Ethereum to other blockchains. So unless you are doing institutions, investors probably won't care too much. For them, $100 fee, $200 fee to record a transaction that could be worth $1 million would be okay. But for retail users, it's a big deal. That's why we saw explosion of NFTs on competing blockchains, right? Solana, Bored Ape Yacht Club. That's from Solana. And then now we're also seeing some of the others, which is like, let's look at the top ones. We got a Solana exploded. These all happened just in last year. If you look at Solana and look at its 1 yearly chart, it was trading close to 24 bucks, and then suddenly it's exploded. Not just the price, but it's also its usage started to grow. And we saw other exchanges like OpenSea started to accept NFTs that are minted on Solana, because that's where most of the artists and the users started to go. It's cheaper to do it on Solana. Of course, there are other risks that you take, but if we keep that risk aside in terms of decentralization, etc. By the way, I think most of the retail users don't understand the risk around decentralization anyway, because we are so comfortable in living in the centralized world controlled by a single entity. Sometimes it actually gives us a comfort feel that it is actually controlled by someone. It's only when the proverbial shit hits the fan that we realize, why did I leave all the control of my fortune to this particular person? But yeah, we've seen growth in Solana. Next came Avalanche. Again, the promise of all these projects just has been, we are faster, we are cheaper, right? As compared to Ethereum. So we'll see. But this is a good development in terms of Ethereum finally, eventually moving to proof of stake after 7 years of work. Then there are some comments from analysts saying, hey, if the cost will be less, there'll be more demand of Ethereum. We should increase the price of Ethereum token. But there is also, and this report doesn't talk about the other fact. And depending on who is actually interviewing a person, sometimes the outcome of any interview is all based on who wants to interview, what's that person's outlook is towards that particular subject. So while they talk about the fact that the cost of transaction will reduce, the cost of the transactions become much faster, and hence we will see a lot more value coming back to Ethereum. Hence there will be more demand for Ethereum. Hence the pricing should go high. But the fact that they've conveniently ignored is right now we have close to $6 billion worth of Ethereum locked into a smart contract, which will be released or available to release once the switchover happens from proof of work to proof of stake. So it could be anybody's guess in terms of from a short-term perspective. There are opposing forces will be there. One is positive side is reduced cost of transaction, more projects coming back on Ethereum because it's faster, cheaper. So more use of ETH tokens. On the other side is could be increase in the supply of ETH tokens, because now all the validators who had staked their Ethereum while this project was ongoing, and right now they can't withdraw it. It was kind of a bonded, it was staked and bonded onto the smart contract for Ethereum 2.0. And they will be eligible to withdraw it or release it only after this project is done. And for bonding it for till the duration of the project, they were earning some yield. And again, the yield depends on, it varies. But that's how the whole project has started from. So there could be, if I had bought ETH at $700, $400, $800 2 years ago, and I logged into the smart contract, I've been earning yield, whatever, 6%, 7%, 10%, 12%. But now ETH is at what, $2,400? I might want to take profits and sell it out, my Ethereum. Today, I can't do it because all that is logged in the smart contract. There are almost $6 billion worth of ETH. I don't know. Let's check on what's the total number of ETH logged. ETH logged in ETH2. Oh, it's 34 billion? I was way off. Oh, 7.4 million ETH is locked, which is like almost $30 billion. But you have to remember 6 billion number. Anyway, so this is way higher. Right, so 8.8 million ETH is logged in this particular smart contract. So when this project is done, and I don't know what the schedule of release is, but my understanding is these contributors who have locked their Ethereum into this smart contract will actually be able to now withdraw it. Right? So you might see for some part of a time, there could be opposing forces that you might see temporarily, if the supply increases, price could go down. Right? So anything could happen in short term. But I think in a long term, this will really be good from an ecosystem perspective for Ethereum. And that will also be the test for all other ETH killer blockchains, especially the blockchains whose selling proposition was we are faster and cheaper than Ethereum, which I believe what Solana and Avalanche claim. Nothing more than that we are faster than Ethereum, we are cheaper than Ethereum. So we'll have to see how those tokens might perform after Ethereum moves to ETH2. So that's one big news from an Ethereum community for the last week. Anyone else dealing in Ethereum ecosystem? And from a portfolio perspective, most of the investors, including the institutional investors, or maybe we should look at that report. Yeah, I didn't review the funds flow report. Most of the institutional investors have biggest holdings Bitcoin, second biggest is Ethereum, then everything else. So I don't know, it could be very difficult at this point of a time. Maybe Ethereum has already cornered or will continue to be in lead as far as a smart contract platform is concerned. And we'll have to see how some of the other competing platforms, what's the adoption of that platform. Unless they bring in something which is unique to that platform and not compete only on speed and the cost. One of them is, I would say, not a blockchain, but something that provides an infrastructure for creating new blockchains. We'll see that's one project, Polkadot. We'll see how that adoption grows. But yeah, interesting times. What else caught my eye? This came in yeah, today I saw a tweet around the influence of a particular individual on any community or any ecosystem. So there's a DeFi guru, Andre Cronje, who got who became famous with the yield farming when he basically launched Yearn Finance. And these are those wild times of, I think, 2020, early 2021, when everything around the DeFi was going crazy. You will see continuously, you will see more and more projects from yield farming coming online. And the best one, the one that caught most of the attention at that point of a time was Yearn Finance. Where is Yearn now? And at some point of a time, that token was like some 38,000 YFI. Yeah, now it's cut in half. It went all the way up to 60, 70, 80. Yeah, so he was a founder and the main dev lead on the Yearn Finance. And then, of course, once it became successful, he started doing a lot more consulting for other projects, sitting on an advisory board for other projects, or a move and started creating some other yield finance projects also. But then there's a news that came is like Andre and Anton, who was another developer on the DeFi ecosystem, saying, we're done with this ecosystem. There are 25 apps and the services that we're going to terminate. And Yearn Finance, of course, is one. Then there are some other projects on which either these individuals or developers were directly involved, or they were indirectly had an influence as advisor, as CTOs, etc., etc. So we saw after this announcement, some of those projects, some of them fell 75%, some of them fell 50%, and all that. So this is again one of I would say a reminder that if we are getting into any of these projects, we got to be really careful in terms of how much influence does an individual have. So today, that's one big concern on Ethereum, which I have, is that there is one, even though it's not technically is not a CEO, but Vitalik Buterin is the face of Ethereum. What if anything happens to Vitalik Buterin? What could happen to this ecosystem? That's one of the biggest concern I have. Polkadot, Gavin Wood is there, right? These projects haven't yet, from my validation perspective, they have become decentralized, but in terms of implementation, in terms of uh, their upgrades, in terms of their progress, technologically advancements, even though they claim that it's all governed by community, the impression and sometimes the perception is more real than reality. So the perception is not really that it is completely decentralized. Bitcoin, on the other hand, from from an outside-in view, does look to be a lot more decentralized from a decision-making perspective, a lot more decentralized than Ethereum. But eventually, I guess, the good projects will move to a model wherein it's not Vitalik calling the shots. Or even if he is not calling the shots right now, probably the perception will also be corrected that it's not Vitalik's. And some of these smaller and the younger projects, I don't blame anyone, and I don't have much sympathy for anyone losing money on these projects. Hey, you should do your homework anyway. There's a lot of this is not a scam, but just understand these projects. Some of these projects are just the token just got value because they got someone to back it up, some big name to come and sit on an advisory board. But that shouldn't be why the token should get value. So when a guru retired, it might take many dApps with him. That's another one. Third one, again, surprised to see the growth in Terra Luna. Right? We talked about two of the competing chains. The third one, I didn't touch base upon it, but the third one, if you look at, which is Terra. But again, Terra, Cardano, Solana, Avalanche, these, let's say, out of top 20, these four are the ones which are basically calling themselves as alternatives to Ethereum. Polkadot, I'll keep it outside of that, but it'll be good to see what happens when ETH2, they've moved to proof of stake in summer. So should be on our radar if you're holding any one of these to figure out what the impact could be. But yeah, we saw of all others, it's only Terra Luna is in red. Oh, sorry, Terra Luna is in green for the week. So looks like it's now second highest total value log just behind Ethereum. It has even surpassed Solana, which is a tremendous amount of progress around Terra side. And the way the Terra and the Luna, they have a very, I would say, a complicated mechanisms of their stable coin and how the value of the stable coin is maintained. So that's an interesting concept. But yeah, I do see a lot of crypto Twitter being bullish about Terra. Again, not a financial recommendation. I haven't done much study around Terra, so I will wait to do my own study to figure out what's happening in this ecosystem. But it did, surpass Solana as well as Avalanche to gather a lot of apps and the adoption on the DeFi side. And finally, a few more traditional businesses, they're warming up to crypto. And I think after this whole executive order from President Biden, few more regulated businesses, the traditional businesses who have been sitting on the side thinking what might be in the executive order, probably are now relieved because of, we didn't ban anything. We didn't pass any stupid laws. All we did was the right thing to spend some more time and energy to make US the lead in crypto economy. So we saw a few more traditional businesses, and this I wasn't even aware until I came across this tweet saying Adobe's Behance platform will now allow users to showcase NFTs on Solana. And I was like, what is this? Adobe has to do anything with crypto, right? Then I went to figure out what is Adobe Behance. And looks like this is actually a creative network. Right, so it looks like Adobe bought this company, and in which artists, and of course, they probably use Adobe's Illustrator or all their creative software suite to create these pieces of art. But more interesting for me is now they will also start to list NFTs from Solana. They actually already do for NFTs on Ethereum, but now they'll also start doing on Solana. So again, growing adoption. DraftKings, which is online gambling, online gambling for games, sports gambling company. Now they also decided to become a validator on Polygon network. So Polygon, if you recall, it's a layer, it's a scaling solution for Ethereum, right? So while Ethereum has been working through its own scaling solution, means changes on Ethereum, there are a lot of other ways to scale the network. Polygon is probably the most used and most adopted scaling solution that currently exists on Ethereum. Of course, there are others: Optimism, Arbitrum, ZK Snarks, but Polygon has been the most widely used and adopted by most of the projects. So it's good to see saying that traditionally it's an SEC company that's governed by falls under SEC regulations, company that is actually publicly listed in United States exchanges, actually started to dip their feet to become a validator on the Polygon network. And lastly, there was another article on Wall Street Journal this week in terms of how, come on, only if it can load. All right, how the mainstream hedge funds are still pouring billions of dollars into crypto. Right? And that's the reason why we are also seeing a lot more volatility. And again, that's my perception, is a lot more volatility in crypto. And that's why we are also seeing why Bitcoin and Ethereum have now become more correlated to our regular stock market. Right? Before these big funds, hedge funds or institutional investors came in, this whole crypto assets were kind of uncorrelated assets, right? Because most of them, were the OGs who were dealing in this, or maybe retail investors were dealing even in this, who don't really have to, are not answerable to anyone. If I want to hold Bitcoin, I don't care if it has gone down 50%, I can still hold it, I'll hold it. But once you are running a hedge fund or running a family office, or if you're running an institutional fund, and it becomes a completely different game. If there's a risk in the market, you'll try to see, okay, where can I raise money from? How can I move into cash? Or I need to show some profits by end of this year. Okay, maybe one of my assets, which Bitcoin, has appreciated 200%. Let me sell this, right? So we are seeing a lot more decision making then starts to happen the way the institutional and hedge fund managers are, have been trained to think throughout their life. And that's why now I feel that the Bitcoin especially is becoming more and more correlated to a NASDAQ kind of high growth stocks, right? It's no longer or doesn't behave, it doesn't correlate more to the gold. That was the initial thesis, or at least thesis which I have is it's a store of value. Another store of value for 5,000 years have been gold, but it doesn't really run in correlation with gold. And one reason could be because of this entry of all these hedge funds who are taking a lot of positions, and they are attuned to behave in a certain manner, right? So, but the positive side of this is that there's a big money now in this market as well. So, irrespective of where the price is, I think from a traditionally, the growth in this ecosystem, there's no let up in that. We continue to see over, every week, we'll come across one or other news around which traditional company is now experimenting in crypto economy. Right? And why do I care what's happening from a price perspective? Right now, my focus is to see, is there enough adoption of this or not? So, oops, where did it go? So from price perspective, oops, it's fallen down today, or it's down from 65 to 38, or it hasn't done anything in 2022. That's fine. These things take time to realize its value. We are way early in this game. So last thing on the adoption side was something that we always review is funds flow, weekly funds flow report. So quickly looking at the funds flow, looks like while there have been a lot of geopolitical tensions from last few weeks, while the growth in while the traditionally, the markets have been weak, but overall from a crypto side, we actually moved from being net outflow to net inflow from institutional perspective. So last week, total inflow was 127 million, which is a little higher than the previous one. Again, Bitcoin saw total inflows of 95 million last week, which is the largest single weekly inflow since early 2021. So this is what generally happens, right? It's not just Bitcoin, but even on the good stocks is when the retail start to sell, or when the markets are lower, or when there is not much of an optimism, everyone becomes pessimist. When there is a fear in the market, the big players start to accumulate, and the weak players, they start to sell this off. Right? So that's what we saw. This has been the largest inflow since 2021, and now Bitcoin has seen some continuously 7 weeks of inflows. Same is the case with Ethereum. 25 million last week. So overall, if I just look at the asset-based management, of course, the asset under management has come down because the price has come down of all these assets, right? But overall, I think still okay. So that's on the funds flow, weekly funds flow side. Anything else? Any other questions or any other topic, or what you've been looking at? Otherwise, I want to look at this Abra. Today, while I was taking my stroll, half an hour stroll, I was listening to a podcast where I heard about Abra. And that project seems to be very, very interesting to me. So I thought maybe we'll spend some time, unless you have something else or any other questions, or you want to talk about any different things. Pretty silent crowd. Give me some feedback so that I know that you are still there. All good? You can hear me, right?
Yes, all good.
Oh, okay, thank you. Crypto fell down. Not really, Ramesh. It's a volatile asset. If you look at overall, I think it's down. If I look at the drawdowns, means from recent highs, it's down around 40%. There are many stocks which are way down, more, way more down than what crypto is. So, and a lot of retail investors, a lot of institutional investors hold those stocks. And I hope you know what stocks I'm talking about, right? Those are all innovation stocks. They're down 70%. So right now, I would say those stocks are behaving like so-called shit coins in crypto terminology, right? Which are way, way volatile. From looking at all the growth that's happening, looking at the adoption that's happening, I think I'm still bullish on this economy. Is it going to be volatile? Sure. For sure, for definitely, it's going to be stay as volatile, but that's a price. That's a price we got to pay. We'll see. Okay, so last one, which I meant up to 45K and then down. Yes, so 45K came along when there was during the start I talked about, I think Sam had a question around the whole Ukraine donations and all that stuff. So during that time, after the attack from Russia and Ukraine, after that conflict, Ukraine reached out to the rest of the world. The government reached out saying, hey, donate us. And they were willing to accept donations in Bitcoin. They started with Bitcoin, Ethereum. And then now they have also started accepting donations in Dogecoin and a lot of other coins. Right. So overall, I think there was around $60 million plus is what they've already raised in donations. Now, there were two factors. Number one, suddenly a lot more people in Ukraine, not just Ukraine, also in Russia, started entering into a crypto ecosystem because the rest of the world had cut Russia off from the financial network. Ruble fell down 30% overnight. So Russians lost most of the purchasing power. You're like suddenly poor by 30%. Right. So during that time, we saw a lot of volume in the ruble versus and BTC trade. So we'll look into the exchanges on and generally look at the pair exchanges. Ruble and the BTC had a huge uptick in trading volume. All right, last one. Let's look at this project. Is like I said, Abra, and what got me interested in when I was doing my walk, and I'm like, I need to go and look at it because I think it was a CEO who was on a podcast, and what he referred was you can actually take a loan, which is interest-free loan on a collateral, if you borrow up to 10% of your collateral value. That could be an interest-free loan. I thought, maybe I need to go and check this out. So anyone heard of Abra? I came to know it only today. So I have no experience on what they do. Now let's explore. Again, this is another one part of how crypto is could make it easier for anyone which is holding something of value to actually get some value out of it. Hailing from India, I know in India, gold is considered a store of value, and gold has been passed on from generations to generations, right? Even today, we talk about it, and first thing my wife said, maybe you should buy some gold jewelry and give it to our kids for the next. I'm like, my kids? I don't think in the US they considered gold as a store of value, right? But in India, it still is. It's still considered a store of value being passed on from generations. You give, parents will give gold made jewelry to to their kids because, hey, this will hold its value. But what I've not seen is realizing that value. So when someone tells me, okay, you know what, I want to buy this gold jewelry, and mostly coming from a spouse is, she say, I want to buy this gold jewelry as an investment. I'm like, when was the last time you sold one of those gold jewelries that you bought, 20 years ago? Never. When was the last time that we were actually take some value out of that a store of value stuff, right? The way you can take value out of those is, maybe take a loan against it, right? But never, that things never happens. And it gets passed on from generation to generations, right? Because there's no liquid market. Of course, you can go to pawn shops or you can go to, I don't even know where you can go other than, I don't want to outright sell it because, hey, it's a store of value. I want to hold it, but I'm tight on finances right now. How can I use my store of value to tide over that need? I don't know how to do on a gold. Go to pawn shop, leave it there and get some loan. But then you run into custody issues. So now with Bitcoin, if consider Bitcoin as a store of value, this problem is easier to solve than anything else. And when I was listening to the CEO of Abra, he was saying more than US, what they are seeing is a lot of customers from other countries like India, etc., actually making use of these products. Because in US, we have a lot of established credit system. We have a credit scores, and our financial services sector is way more advanced in terms of offering credits. Right? Majority of the countries, leave out the developed nations, they don't run on credit. Most of them run on debit. Right? Even if you buy electronically, you have to prove that you actually own those assets. You have that money. You run your debit cards. Right? I think I've spoken in one of our sites. My brother doesn't own credit card. He says, I have a debit card, and that's most of the transactions. Right? That's what they've lived like that. And it's a debit world out there. So how they turn to what are the options that they might have to turn over some of the temporary financial difficulties is to make use of whatever you have stored your wealth in. If it's the gold, okay, can I leave my gold somewhere and take some loan on it? Yeah, but that's a difficult thing to do, right? But if it's related to a digital store of value, it becomes much easier. I think that's where Abra comes in. But I was interested to see this borrow from us for 0% interest and thought maybe I'll look more into this. So what it says, with 15% loan to value, you can actually get a loan for 0%. That is interesting. Say if you loan 1 Bitcoin, okay, does this work? Does this update or not? Okay, some JavaScripting issues. But I think their claim to fame is, or this is what they're claiming at least, is if you leave 1 Bitcoin as a collateral, 15% of the current Bitcoin price will be, say, $5,700. So if you take out 57, okay. So let's say if you take out $1,000 loan, it's not exactly 0%. It might be just 1% for a year, which is still a very decent deal. And if you take out 20% loan to value, so now for those, and especially this is what rich people do, is they finance their lifestyle or finance their current needs by lending the financial assets and taking loan on top of it. Right? That's all Elon Musk does. He has billions of dollars worth of Tesla shares. All they do is they pledge the shares and buy $1 million mansions. If they have a need to buy a new jet, they're not going to sell the shares. They pledge the shares, take loan on top of it, and run their lives. So if you want to buy a house or want to finance some purchase, and if you're holding, especially for those who are holding these crypto assets today, you might be just paper rich, but the rest of the world doesn't consider, traditional bank won't give you loan on your Ethereum as an asset. So I think this is where this Abra is trying to fill the gap is, we'll loan you USDC or any of the stable coins based on the collateral which they accept, what BTC and Ethereum, which now seems to be a little interesting project. If I want to say buy or finance a car, I don't want to sell my crypto assets, but I, if I have to pay my car loan month to month basis, maybe I can leave the assets as a collateral with Abra and take out loan at 1% rate of interest. Right. So this seems to be an interesting one. So what happens? Get a personal loan without a hassle. Use your funds in your trading account as a collateral to get a loan. So if you don't have funds, maybe you move funds, and then you can borrow TUSD, USDC, and USDP as a stable coin. Pick out a loan term. And the best thing about why it could be done in a minute on the crypto side is because it's a bearer instrument, right? We don't need any other intermediary to confirm that this is the assets that I hold. As long as if I can sign the transaction using my private key, there's nothing else to determine and figuring out whether did I own that or not. So this does seem to be an interesting project to me. What is Abra Borrow? It's a new lending program that lets you take out a loan using a Bitcoin and Ethereum holdings. Right now, they're not doing anything else. The interest is calculated a loan to value ratio, more the collateral, lower the interest rate, and the loan term. Okay. How do I get an Abra Borrow loan? You bring in, basically, if you have an existing Abra user, you can fund using your BTC or ETH balance. If you are new, just set up your wallet, fund your wallet, means we can transfer it, and then set up a loan. There are no employment checks, credit history checks, or anything. All you need is a collateral. This is, I feel, is way more empowering statement than anything else. If you're holding something which considered a store of value, say if I hold gold, considered a store of value right now, banks still not going to give me the loan because I don't have credit history. Say I'm new, I don't have a credit history. Or if I don't hold a steady employment, it's a lot of loops. It's become very difficult for getting mortgage or in loans if you don't have a steady employment, right? Especially if you are a business owner, you need to show your last 2 or 3 years of a tax returns and a lot of stuff. And if you don't own business, well, let's say all your net worth is tied in your stocks or in your cryptos, good luck in trying to get a loan from banks, right? They'll ask you thousands of questions. And for now, if you tell them that your net worth is tied to Bitcoin, they might just turn you down. Right? But this is an asset. This crypto is an asset which is being traded. There are futures that are being traded on regulated exchanges, but banks are far behind that. So I think that's the gap which Abra Borrow is fulfilling. And yeah, this could happen in minutes. I mean, I've done this on a DeFi platform, but I'm paying the borrowing cost is almost between 3 to 4%. But this one with loan to value ratio of 15%, eventually end up paying, including processing, maybe pay 1%, which seems to be a very decent deal as long as Abra doesn't run away. So I think that's the biggest risk. You've got to be comfortable is a third-party default risk. Which assets? Only Bitcoin and Ethereum. And the loans are issued in US dollar stable coins. How do interest rates work? Interest rates are fixed, which is great, and calculated based on how much crypto collateral you apply. Is there a limit to what I can borrow? You can borrow up to 500,000. Where can I learn more? Okay, go to support page. Yeah. So I think for someone, I can see the utility of this for someone, and really rich person, say holding $10 million in Bitcoin or crypto, can actually take out a loan for $1 million, not $1.5 million loan at a 1% interest in perpetuity. And may not have to work again. You get your loan from on Abra at 1%. So looks like an interesting project. I do want to explore more on this one, especially around the third-party risk. I think the counterparty risk is the biggest risk. That's for sure is the biggest risk, and that depends on what this company has been. Yes, this was the person who was on one of panelists talking about it. Okay, that's a team. Who are the investors? RRE Ventures, Amex, FBS Capital, Blockchain Capital, Pantera, pretty well known. Pantera actually came up with their new report. I forgot the name. They write a letters called blockchain letters. There's a lot of information in that. I think the mega trend. No, not mega trend, mega trade. Next mega trade. Yes. So they do write the blockchain letters. So Pantera has been very active VC firm. They were active in a traditional finance, then moved into crypto assets. So that's good to see here. DCG is again, DCG also owns a lot of other companies, which is, yeah. So those are the two big names. Amex, of course, is a traditional banker. So yeah, looks like very interesting. Have to see in terms of what's the company related risk that we are running into. Right. That's I would say a big risk. But I find this really interesting that you can get that loan at 1%. Now that gives more ideas to me. Is if I'm okay with this counterparty risk, right? So yeah, I'm okay. I don't have any concerns around the counterparty risk, and you could actually get a 1% and then stake it or loan it to other projects, which will give you 6%, 7%. So that's a good arbitrage. If we are comfortable with the counterparty risk on the both sides. So something I want to maybe dig deeper and try to find out on, how to make use of the store of value to actually generate some value for us. But I think I find looks to be interesting to me, except the counterparty risk. So I don't know. I might have to do more research around, what has happened, what are the users or customers' feedback is about Abra. But something to put on the watch list. This is the real use case of, using it to in your real life rather than just buying a token and sitting it. I mean, this doesn't have token, right? This is like a pure financial services company dealing in cryptos, right? Maybe they'll come up with a mortgage. Who knows? So it'll be cool to see that you can actually get a mortgage based on against your Bitcoin holdings, which today banks won't consider if you tell them, for them to determine your loan worthiness, whether you can repay your loan. You'll have to the bank will run their asset verification algorithms to consider you loan worthy or not. Today, your bank balances, your security balances, they all are considered as a part of that assets. Try talking to them saying, what, I hold Bitcoin and or any of the crypto assets. No, we won't consider this while determining your capacity to pay back the loan. And I know this because one of my friends, he runs a mortgage company. So I have had a discussion. I'm like, can you not put this in your system? And he says, I work with the banks. My friend, he works with the banks and the other lenders, become mortgage broker. He says, no, they don't consider it yet. So, but that day may not be far away if all these traditional companies who are now warming up to the crypto economy, start to get in. I want to talk about some of the other news that came across, like State Street. I mean, because this is now becoming so commonplace. It's no longer a news that the second biggest, what do you call? The biggest was a BNY, a custodian, right? The second biggest custodian is State Street. Right? Now they're opening up their business on the cryptos. They will provide custodial services for crypto assets for big banks and big banks and institutions. Goldman Sachs has opened their books for trading in crypto assets for the rich clients. Those have become now commonplace, but good to see. To me, this looks like an exciting project. Want to maybe try it? We'll see. I just want to make sure that this is not fly-by-night operator, right? Because these instruments, these crypto assets are bearer instruments. And before I transfer it to them, I have to make sure, okay, these are really legitimate and honest business. But this is enticing. See, so borrow from Abra and lend to Celsius or BlockFi. Yeah, I mean, why not? I don't think you can do on a BlockFi anymore because BlockFi has stopped taking US users because of eventually BlockFi was, I think a lot of state regulators had sued BlockFi around offering of these lending products. So recently they had reached agreement saying, okay, they will not take any more US users, but if you have had accounts with BlockFi, you can still use it, but they won't allow you to add more into your account. But Celsius, yeah, that is still open. So yeah, I would say, why not? I mean, I have done this. I bought it at 3%, 3.5%, because that's a variable rate which fluctuates between 3 to 4.5%, and lent it to Celsius at 8%. But 1% is way better than 4%, right? But the cost of that 1% is counterparty risk. I don't have any counterparty risk on that 4% because that's a DeFi platform, right? So that's a decision making. Is 3% less cost? Is that worth taking the risk of dealing with the counterparty risk? But we'll see. So that's my new learning for today. You never know what you might hear. Always keep your eyes and ears open in terms of what might come across. There are so many things happening in this economy. I never heard of this, Abra project or Abra company before today. So, they're just talking about. So that's about Abra. What else do they have? So you can actually trade. Okay, that's pretty standard stuff, is trading and the coins available. Okay. Yeah, something to maybe explore more around on Abra. Cool. Any other similar projects? So these are the times when there is not much of talks and happening around crypto, because crypto has been sideways. No one wants to talk about it if it's not going up. It's good to look at some of these real life projects which we can actually use to do something, rather than just buying a token and sitting on it. So any other some projects you're interested in or have come across? I think somewhere I read about a company, and now I can't recall it. It's been a few months, that they actually will allow you to take a mortgage, stuff that I was talking about earlier, mortgage based on, against your crypto collateral. Will be interesting to see that. But I like this one. In this case, you don't need, it's just a plain and simple loan. I can do whatever I want to with this loan, right? Which sounds interesting. So if you got $100,000 worth of crypto, you can take $15,000 as a loan at, even though they claim it's 0%, but it does show the interest is 9.96 for 1,000. So I would assume that this is like 1%, might be processing fee, blah, blah. But still 1% for a year, still okay. Cool. I think that was on my agenda for learning. This is Abra. All right, we also hit our time limit. Anything else? Any new projects you guys came across? Nothing. Any old ones that you looked at or you came across from some updates perspective? Ethereum, I know Ethereum went, we talked about their ETH2 upgrade. I haven't seen much on the, I've not been tracking, but nothing came across my Twitter, etc. around, let's say, what's happening on the Polkadot, apart from, the regular auctions, which they keep doing, or what's happening on Solana or Avalanche. Looks like a lot, not too many news around from a development perspective over there. So we'll see. So far, so good. I think especially from a Bitcoin perspective, staying in sideways for so long is a good signal. Depending on what's happening in the rest of the markets, because there are a lot of institutional investors, family offices, or rich individuals invested in this, it could go down based on what actions those individuals or other funds managers take. Right? But long term, I think still everything looks good. All right, guys, that's all I have for today. I can hang around. We can engage in some Q&A or share something else. Or if you have some other ideas or you're building something in this, yeah, could be. We can talk about that. Otherwise, we are done.
Yeah, I did that for you. Wanted to ask about the news about Andre leaving DeFi. So what will happen to these projects? I mean, ultimately they will continue, but then will the value of the token drop because there's no leadership, or what do you think will happen to these projects that once he has left, especially the ones where he's the main developer?
Yeah, so that's a risk, right? If he's the main developer and you have your main developer leaving it, then there may not be any further continuous, innovation in that particular project, right? And these, not just the Andreas project, but I think any project, they have to continuously evolve and develop and improve upon with time, right? And if the core developers have left, and if the ecosystem is not big enough, or it's not big enough in terms of the number of developers working on the project, who's going to pick up that after, let's say, Andre and the other person leaves? So that is why it is important when you're looking at a coin to go back and check. Number one, is it open source? Number two, what's the activity on that open source? How many developers have can commit to it, right? Go and look at a GitHub and see how many commits are happening. If there's only one or two people doing all the commits, that's a risk which we generally don't think it, but in these cases that risk could materialize. So that's a concern I would have on holding those tokens, is who's going to pick up the slack once these lead developers actually leave. And I think that is like a timing is pretty quick, right? They've mentioned around 3rd April, which is not even a month. And who knows, there may be more story behind this, why they've taken this sudden decision, because looks like it's not the first time. Now they're saying, unlike previous building in DeFi sucks, rage quits, this is not a knee-jerk reaction to the hate received from leasing a project, but a decision that has been coming for a while now. Who knows how much truth in this? Right? I don't know, maybe, and I hate to think, but there's a lot of scams that go around in this economy. So yeah, so that would be my concern. I don't know how big these projects, a developer ecosystem is. And looks like market did react. So solidly AMM, automated market making. What is this solidly? What is this? I have no idea. Solidly. Damn. Yeah, from $16 all the way to $2. What other projects? Keeper. Okay. This is why I'm generally skeptical of jumping onto a project based on a big name over there. Oh, this was founded by Andre Kone. And I think now that after doing a year in finance, he obviously milked his popularity on some of these other projects. Now he's saying, you know what, I'm leaving, I'm done with this. Is this a rug pull? Possible. I would hate to think, because Andre, I mean, this would be a black mark and on this economy, and will give another reasons for regulators to say, see, I told you, it's only only antisocial elements, only those who want to scam other people live and play in this environment, right? But I don't know, it's possible. Then now you're suddenly saying, okay, I'm done with this. Cool. All right. Okay, if nothing else, let's call it a night here. Thank you, everyone. And we'll talk again on Saturday. It's a lot of stuff that happened, at least on the stock market. Most interesting is Amazon announcing a split and doing a share buyback. So it will be interesting discussions for Saturday. Cool. All right. Thanks, everyone. And I'll see you on next Thursday. But if you're interested in talking about stocks, we'll do that on our Saturday meeting.